Welcome back. President Trump tweeting at Apple after the iPhone maker said that trade tensions with China will affect prices on Apple popular gadgets. The president writing this: Apple prices may increase because of the massive tariffs we may be imposing on China, but there's an easy solution where there would be zero tax and indeed a tax incentive. Make your products in the United States instead of China. Start building new plants now. Exciting. Make America great again. Joining me now to talk more about that is Investmark Advisory Group Principal Michael Lee. Michael, great to see you. Thanks so much for joining.
Good morning. How are we doing?
Can Apple even afford to move the manufacturing here? Would that be a lot more expensive?
Okay, I think over time Apple can do whatever it wants, but I'd say what's going on right now, this can't be any surprise to Apple. Tim Cook has had several one-on-one meetings with the president. This is coming, and it's a lot. It's about a lot more than trade. You know, China really is the #1 enemy of the United States. They're attacking us from an intellectual property standpoint on a daily basis. I mean, there's a defense contractor on Tucker Carlson a month or so ago, and they said, you know, the Chinese government was trying to hack in their firewall like at least 1,000 times a day. So they're also engaging in some predatory practices all over the world, you know, going to countries like Sri Lanka and Kenya and putting in infrastructure projects with loans that they can never pay back, raping resources from all over.
So it sounds like you agree with the pushback against China, given what their behavior.
Yeah, absolutely. What else are you going to do? Should the U.S. just sit by and let the Chinese, the communist government, try to take over the world, who has no interest? You know, they don't have the U.S.'s best interests at heart, right? And what I think the Trump administration has said to them is, look, we can make peace and we can make this work if you open up your markets instead of trying to take control of all of our companies that come in.
But do you think, how patient are people going to be with this? Because I've been amazed, for the most part, optimism has stayed up. Everybody's talked about how this trade war was going to have devastating impact on consumer confidence in the markets, and yet it's not. I think a lot of people think the president's doing the right thing, but how long do you think they'll give him to get this done?
Well, fortunately, our economy is booming. Right? We had a wage growth number of 2.9% on Friday, but that doesn't also include the amount of hours worked per week. So when you add the increase in hours worked, plus the wage growth, you're at a little 5.1, 5.2%, plus a tax cut. Now you're in the high 5% for disposable after-tax take-home income. So as things are booming here, what these tariffs are, you're essentially raising taxes. And from 2012 to 2013, nobody thought it was Armageddon when Obama raised taxes. So these tariffs will be less than a third of what the Obama administration did. And if the economy is strong enough, we can just soldier on. But there's multiple facets going on here. And I think this policy push to revitalize manufacturing in our country has worked. If you look at the unemployment rate for high school dropouts, it peaked at about 15.5% during the recession. We're down now around 5%. So the people, the forgotten man, if you will, has really benefited in this
economy. In terms
economy.
of taxes, you know, Apple's argument is if the tariffs do go in place, it's essentially a tax on the consumer. They'll be paying more for the Apple Watch, Apple AirPods, and so much more in terms of the Apple lineup. So does it hurt the consumer in the end?
Which is what the Fed is watching.
Exactly.
And so do you have...
But I think on that point, though, as the consumer tax that would hurt the consumer, the tariffs. So the president, it's kind of like a perfect segue for him or layup for him to say, okay, just move your manufacturing over here to the U.S. Exactly. Like, I think it couldn't have played out better for the administration.
Kind of hard to do when you employ 1.3 million people in China and you have contracts there and assemble most of your products already. But that supply chain shift takes a while.
If you've seen their new factory, you know, I don't know how many people it holds, but there's a ton of people there.
In the U.S.? In
the U.S., yeah. So, you know, they've already started to manufacture certain things here in the U.S. already.
But that's an interesting point. 1.3 million people working in China for Apple.
Yeah, if you're willing to pay $1,000 for an iPhone, like, why wouldn't you be willing to pay $1,100? If you're willing to pay $400 for an iWatch, why wouldn't you pay $425 or $450? I think there's a lot of pricing power with Apple, and I don't necessarily think these tariffs are a good thing. But the only way that you can affect change in China is with money, right? They do not have an open economy. They manipulate their currency, and they use everything they can do because remember, they are communists. And what does the communists want? Do they want power? Do they want prosperity? And without an open economy, they're going to be capped out on their growth. So what the administration is saying, open up your economy, open up your country to more foreign investment. In the end, it will ultimately benefit you. I think the only possibility for regime change in China is if they go into a recession and there's a popular uprising. So several billion people in that country, a lot of which live slightly above the poverty line. No coincidence there. So they can say, look how many people we've lifted out of poverty. It's there's a lot more going on here than the price of earpods.
There are deals happening right now. The president apparently negotiating trade deals right now with Canada, with Japan, and with China. So at some point, markets are going to want some answers. How much time, which was your question, do you think markets give this president to actually put some more deals on the board?
Yeah, I think as long as the train doesn't go off the track. So
if the markets believe that he's dealing and we'll get ultimately a better deal.
Yeah, and you look at what happened with Mexico, and then we're starting with the EU right now. This all makes sense. The U.S., in terms of international trade, is 800-pound gorilla. We're starting to throw our weight around. Exports year over year are up 8.1%, 8.2%. Imports are up 9%. So global trade is booming, regardless of all this trade tariffs and all these trade spats. So, we were just talking. We are much closer to the beginning of the second leg of this expansion than we are to the end. So if there's some sort of geopolitical event, a terrorist attack, some sort of war that's unforeseen, maybe that could take us off the rails. But the snowball effect of the U.S. economy growing is happening right now. And as long as that continues, all these trade spats can happen. And I think for most of these countries, they may be short-term victories to the U.S. But the U.S.'s point is that open up your markets. Okay, the U.S. is the freest and fairest trader in the world, and as a result, we've become the most powerful economy. So what we're trying to do is get other countries to open themselves up, and in the end, it will ultimately benefit them, while it might seem like a short-term loss.
Sounds like you still want to buy stocks with this backdrop.
Absolutely.
How do you invest right now? Tell us.
Look, I still like the banks. I think rates are going higher. I think deregulation is in effect slowly but surely. And so as the economy is growing, as rates going higher, banks are going to write more loans at higher rates. We've seen that trade come and go a few times. But, I think the yield curve is much more likely to steepen dramatically, which would be huge for all the major banks, than it is to invert.
And it seems like a great time, Mike, for looking, whether it be the banks or the big cap techs, when you get negative headlines that drop the whole sector 3 to 5% in a week, seems like a great time to buy them. And we're seeing that right now in big tech. Companies like Facebook having a big pull off. Do you allocate money there right now?
Yeah. So my two favorite sectors are three. It's big banks, big tech, and then consumer discretionary. The cyclical play, and then everyone that says that this market is turning, you would see leadership in defensives, and we've seen that in tiny little pockets. But the reality is, since the election, the leadership has been in consumer discretionary, in big tech. I'm a buyer on weakness in any of those sectors. These companies are doing as well as they possibly could, have tons of cash, and the sky's the limit as far as they could go.
All right, we will leave it there. Michael, it's good to see you.
Thank you for having me.
Thank you so much for joining us, Michael Lee there.